Coming up in today's video, we'll talk about the breakdown in the dollar and whether or not more rate cuts could send this thing plummeting lower from here. And could that signal another leg higher in the precious metals market that seems to endlessly be drifting up? And unbelievably, in the last 30 years, in blue you have the S&P 500 and in the candlesticks you have gold price. Unbelievably, gold has actually kept up with the stock market. The reason I say this is so unbelievable is gold is not a yielding asset, whereas the S&P 500 is full of companies generating income. And yet, during this whole stretch of time, gold has had a phenomenal comeback here in recent years. The question that this poses is whether or not gold making this kind of move is signaling some sort of national debt crisis that could be coming down the pipeline in the next few years, which is exactly part of the reason why I consider myself a long-term sort of semi-perma bull when it comes to precious metals. I believe it's a great idea personally to have some exposure to precious metals at all times to protect myself from what could be a national debt crisis. Globally, we see rising national debts that seem to continuously go higher and higher. We'll talk more about that later. This morning, we got ADP numbers that came in lower than expected. In fact, minus 37,000 jobs surprise from the forecasted 5,000 jobs added. And ADP continues to look rough here in recent years, with this latest negative value not being the first one, but rather the third negative print that we've had in the last few months. This is concerning because there's something specific about this that I wanted to point out. According to CNBC, the US labor market slowdown intensified in November as private companies cut 32,000 workers, with small businesses hit the hardest, payrolls processing firm ADP reported today. However, keep an eye on this section. Larger businesses entailing companies with 50 or more employees actually reported a net gain of 90,000 workers. However, establishments with fewer than 50 saw a decline of 120,000. So small businesses actually took it the hardest here, letting people go at the highest rate. And noticeably, the ADP report is the last monthly jobs picture that we're going to get before the Fed decides whether or not to cut interest rates next week. And if you've been watching the channel, you know I've been long on gold here recently. And I just moved my stop loss yesterday into profit just below yesterday's intraday low. I'm looking for technical follow through here after we recently had a very shallow break through these prior highs looking on the daily time frame. We topped out on the gold price 21st of October, and I do think that we are, well, I guess actually the 20th of October, and I do think that we are likely headed back to retest that area. And I like to periodically look at the US debt clock just to get an idea. We're sitting at $38 trillion in US national debt. But as long as everyone in the entire United States carves out a quick 111,000, we could pay this off tomorrow. Obviously, I'm saying that jokingly. Most people do not have $111,000 sitting around. But the real reason I say that is just to show how ridiculously hard it is going to be for the US to ever pay back its debt. And instead, the administration actually has an interesting strategy in regards to this. The answer to paying off our national debt is that the administration doesn't want to. We're not going to. In fact, mathematically, it is incredibly difficult to pay back our national debt anytime soon. So then what is the plan instead? Well, the plan instead is to outgrow our national debt as a relation to GDP. And step one is to cut interest rates to help with a jobs market that is looking pretty lackluster here and has been in decline in the last few years. By cutting interest rates and making money essentially cheaper to borrow, the idea is that it should spur small business activity and hopefully bring back hiring into positive territory. But lowering interest rates means piling on more to the national debt most likely, as the current administration is also interested in cutting taxes as much as possible. So I think this is another reason why gold can continue to go higher, as the Fed is likely to continue cutting interest rates and national debts are likely to continue to go higher. So I remain bullish and continue to update this trade with members inside of our Discord. And I've been long gold for actually a couple weeks now and continuing to hold on to this position. And as with every trade that I take, I shared a full breakdown as to why the position was taken, updates and analysis behind what I was doing with the trade, and continue to do so here as I recently just trailed my stop loss into profit inside of the group. If you're interested in getting access to these notifications from me, I trade forex, indices, gold, commodities, etc. You can get all of these updates sent directly to your phone with our VIP signals room. And during our Cyber Monday deal, which we've extended to the end of this week, we are currently offering 45% off the Edge Finder or our VIP signals room. If you want some information about this, simply use the link in the description down below, should be the first link, to send a direct message to a member of our support staff. Or if you're watching on a TV, or it would just be easier to scan a QR code, simply scan the QR code that you see on your screen right now to speak directly to a real person on our team. They can get you our best discounts of the year, and if you need to split things into a payment plan to make it more accessible to you, you can do so by simply speaking to them. We've had many people take advantage of our payment plan offers as it makes it more accessible and spreads out the cost over time for you. But don't miss your chance. This is the lowest cost that we'll be doing all year long on our VIP room or the Edge Finder. Taking a look at gold on a seasonality perspective, we are still kind of expecting a little bit of an uptick into the end of the year, but don't be too short-sighted with this, because check this out. When the calendar year turns back into January and February, this is typically a very strong period of year for gold and precious metals in general. So as we turn the calendar into 2026, and we are likely getting a new Fed chair that is going to be very in line with the Trump administration, aka cutting interest rates aggressively, I think that could be a strong tailwind for precious metals and for stocks. Gold loves rate cuts because it is sort of a more fiat currency getting printed into the situation kind of dynamic that is very bullish for gold, as more fiat currency means the value of precious metals should go up. And of course, stocks, I think, are moving higher in reaction to a more dovish Fed chair, because it basically means borrowing costs are lower, so money gets flooded into the system. And where does it typically end up? Well, it goes right into corporate earnings. So I remain bullish on both the S&P 500, the NASDAQ, and on gold and silver going into this year. Just take a look at silver from a price action perspective. This is actually putting gold to shame right now. We broke all the way through these prior all-time highs, and I'm actually very interested to watch for any sort of pullbacks on silver, especially around that $54 an ounce level. I think there could be some really good pullback buys for my personal trading strategy. And take a look at Bitcoin today. Trying real hard here to get back above this downward trend line that we've watched for the last few months. Each time that prices come up to this area, however, sellers have been strong, continuing to push it lower. So we have a lot to prove here. If you're going to see a breakout to the upside from the bulls, I think this is where it's going to happen. By default, however, momentum still favors the downside, at least for now. So I think the bulls have something to prove if we're going to see a breakout. When it comes to Bitcoin, I remain neutral, at least for now, but watching for that breakout to potentially signal some bullish setups. Specifically, I like the idea of a break through this level and a pullback into this area of support, looking for higher prices. And I had a really good question come to me on a live stream here recently, which was, Nick, the Bitcoin cycle is now signaling that we should have somewhere around 300 days to the downside in another bearish market trend. How much of that is the reasoning behind why Bitcoin is moving lower? And I think it's a fair question, because again, there has been some really historically fair points in the sense that, Bitcoin rallies or uptrends typically last, somewhere around 1,000 days. So if we go from here to here, you can see it's like 1,000 days, and then downturns are like 300 days, this time being like 350 or so. And then again, we've seen that a couple times in history, but I would say that what is the chance that the reason Bitcoin is coming down is simply because it's reached the end of a cycle period? I would say it's probably got a lot more to do with the macro story, which is the 10-year yield for the Japanese government bond, which is, as we've talked many times on the channel, the source of sort of the carry trade globally. I think this rising dramatically has a much stronger bearish pressure on gold than any sort of cycle. Not to say cycles aren't, worth watching when it comes to Bitcoin, but I wouldn't overweight or overvalue too much. Oh, it's the cycle, that's why Bitcoin's going down. There's some real world reasons for why Bitcoin is under threat. And again, the big one that I see is the Bank of Japan talking about hiking interest rates and making borrowing costs higher poses a serious risk to Bitcoin, which a lot of, bullish risk on sentiment comes from the carry trade internationally. I don't want to go too far into that in today's video, but basically the idea is that when the Bank of Japan has low borrowing rates, people typically will borrow yen and buy foreign bonds or Bitcoin or real estate, stocks, etc. But then when borrowing costs start to go up again, it can cause the opposite effect. People cover their positions and buy back the Japanese yen that they have borrowed from the Bank of Japan. This is something that happens big time on hedge funds and sovereign entities and pension funds. So the unwind of this trade is very real and a very strong pressure to close out of Bitcoin long positions. However, we may be ending that soon. In my personal perspective, when it comes to the technicals here, it looks like we are still trying to form some sort of higher low. And if you can get a solid breakaway from this consolidation zone that we've been in the last 2 weeks, that actually looks like we may have some upside for Bitcoin, and perhaps that downward trend or that struggle here for Bitcoin could be over. Bitcoin continues to be a huge disappointment in terms of its seasonal expectancy this year. However, let's not rule out the idea that you could still get a late end of year rally. Based on historical seasonality, you have September, October, November, a pretty good period for Bitcoin, but you also have December being historically a pretty strong period of year for Bitcoin. So perhaps there's a little bit of a bounce back that is due on crypto. Noticeably, January is slightly positive, but February is sort of a more weak period of year for Bitcoin. Also, for those of you guys looking to get funded, check out Maven, today's video sponsor, which offers instant funding as low as $19. They have some of the best industry prices by far. I don't actually think I've come across lower priced funding options. So check them out down below. They also offer really fast payouts, and I'll leave our discount promo code, which will get you an additional 5% off their already super low prices. All that information will be found down below and in the pinned comment of this video. And this morning we had some AI related news that I definitely think we should talk about. Microsoft lowers AI software sales quota as customers resist new products. And this is really important. I'll tell you why. When it comes to AI software sales, that is the backbone to this whole AI trade. Things like Microsoft's cloud, their Azure, right? All these products that they're building around AI. If the demand for those products is in any way, shape, or form slow, it is a serious risk to the market. Here's a look at Microsoft shares, which are lower here this morning by around 2.5%, which is pretty big for such a large company. And Microsoft has actually not reached its prior all-time high since July of 2025. So all this time, we've actually seen Microsoft in a drawdown, at one point down 16%. And companies that provide the picks and shovels to the AI trade, like for example, NVIDIA, are very sensitive to this kind of information. I'll tell you why. Microsoft, right? They're building all the software tools. They're building things like, their Copilot, the AI chatbots. They're building things like cloud services, Azure agents that are, AI agents, things like that. If the demand for those products in any way dries up, guess what? The demand for AI chips, semiconductors, could also take a hit. And for a moment, let's get into the financials of NVIDIA and Microsoft. I know this might not be, if you're not a stock trader, you might not care too much about this, but you really should. If you watch the NASDAQ, the S&P 500, if you're a macro trader in any shape or form, you really should keep an eye on key stock financials. What we're looking at is specifically NVIDIA. We've selected it here in the top right. We're using the stock box, which I'll leave linked in the description down below. The trailing 12-month PE for NVIDIA is 44.5, which is actually, by the way, I would actually say it's pretty good price relative to its historical 3-year average at 67.5 or so. It also has a forward PE of 24, which is really not that expensive. However, it's still a pricey stock. 44.5 PE ratio. What that assumes is that corporate earnings for NVIDIA are going to continue to grow very quickly. Earnings growth at 66.7% is very high. Revenue growth at 62.5. I mean, these are very high growth rate companies at the largest scale. I mean, the whole stock market is built on this AI rally around NVIDIA. And here's a look at Microsoft, which has a trailing 12-month PE of 34.6, which is actually a little higher than its 3-year average, even despite the pullback in share price. But these companies, when we take a look at the income statement for Microsoft, are priced the way they are because they have incredible revenue growth and net income growth. That's why these stocks are expensive. They have very reliable net income and revenue growth. But if something is coming into the picture now where AI demand is in any way slowing, the valuations of these companies could very much come into question and people could drastically reprice them. Even though they're great companies, the issue is that everyone knows they're great companies and they're priced super expensive in response. And as we just discussed, Nvidia is also priced very expensive because it has a rock star balance sheet or income sheet. Revenue for this company is growing astronomically and net income as well. But if anything comes along to threaten that, the stock price could suffer substantially. So that is why the market cares about these sorts of headlines. It matters quite a bit. Any sort of inclination that sales reps at these companies are not hitting their quotas, for example, is something to keep an eye on. By the way, if you want to check out the stock box, if you already have Edge Finder, I highly recommend you also check out the stock box. I'll leave a link and promo code in the description down below and on the screen right now if you'd like to check out and get a copy of stock box during our Cyber Monday discount. But does this mean I'm going to go out and just sell the NASDAQ and get super bearish just because this headline? No, I don't think it's worth abandoning ship just because there's a little bit of some rumors about sales numbers not quite hitting expectations in the AI world. Although I do think it is worth keeping a close eye on. And if it becomes a theme and the market's price action starts to reflect that theme, then I think it's time to get out. So an update on the NASDAQ trade, I am still long. This has been a really nice trade for me. And I've moved my stop loss specifically below this decision line that I've talked about in my recent videos. Specifically, I highlighted that this prior high, which ultimately led to a huge breakout, temporarily held support, also was the post-NVIDIA sell-off day, is a pretty critical spot when we look left. So I've got my stop loss below that level, meaning if we cannot hold that area with decision, then I need to cut the trade and take a profit on my NAS longs that I initiated towards the low end here at that October 10th retest level here. Once we came back here mid-November, I decided to initiate another long position. So from here, I think we do have potential to recapture all-time highs in the NASDAQ, and I would not be surprised if the S&P 500 and NASDAQ break to new highs by end of year. I remain tactically bullish with a stop loss trailed on my position. I also bought several individual stocks that seem to be doing pretty well so far, like Palantir. I also bought Uber and Meta, which I was able to scoop up right around the lows here.